Hello, everybody. Welcome back to the Prospero.ai stock market live streams. We are having a bit of a bullish turn in the markets today. Let's take a live look at where we are at currently. The QQQ is pushing up on being 2% up on the day. The SPY is about 1.5%, Dow Jones 1.2%, and the Russell approaching 1.5% as well. The VIX is down 18% on the day. I think a lot of investors are watching the 30 level, see if it breaks that at any point this week. It's very close right now, pushing down to 30.64 at the moment. So we are seeing a little bit of reprieve in the markets after we got some positive de-escalation in the tariff talks over the weekend. It looks like tech is going to have some exemptions. There is a little bit of refuting it, but we'll get into what we think is going on there. But the market is reacting positively, likes what it heard over the weekend. As you guys are rolling into the live stream, be sure to like it on X or YouTube, whatever you're watching on. Subscribe to our channel on YouTube. We are approaching 2,300 total subscribers. We are only 10 away at the moment, so we should hit that mark this week, hopefully. But let me get into some of the stories we're going to be covering today. So obviously, we'll start off with the market action and the tariff news that we got. We're going to go over gold. Gold has been an unsung hero throughout this year. It has been the perfect market hedge, probably hitting year-to-date highs just last week, up 20% on the year. We're going to talk about, was it the greatest hedge all along? And now, is it actually a reverse hedge? So like, if you think the market is going to become bullish from here on out, should you be shorting this gold move that we've seen? We have an NVIDIA story where they announced they're going to be making USA supercomputers in their Texas and Arizona plants. So we'll talk about NVIDIA. We have an Apple headline that they're now making 1 in 5 iPhones outside of China, specifically in India, I believe. So I want to bring up both of those stories in combination, talk about the two companies, but then also we've been covering these tariffs from the USA perspective a lot on the streams. Maybe we should bring up China a bit and some of the downsides for them if these tariffs actually cause some of the major American businesses to leave, what that would mean for them. Then we have Ray Dalio not buying this rally. He's still a bit bearish. He came out and said that he thinks that there is a possibility of something worse than a recession on the table. And he was bringing up the bond markets and how they were behaving very unorderly last week, and how there's a possibility that he believes something more severe than 2008 could be on the table. So he's kind of the first person to bring up something of that nature, kind of like that much of a panic to the market. So could he be right? He's a well-respected voice on Wall Street. We've covered him before on the channel, but we'll get into the Dalio mindset. Then we want to cover Intel selling off another bit of their business. It seems like left and right, piece by piece, they're kind of just selling off bits and pieces over the past year. So I want to ask George, is there a scenario over the next 5 years, by the end of this decade, that Intel is a thing of the past and someone will just eventually buy out their entire business and the bits and pieces selling will be no more because they will be fully sold to, I guess, there's only probably a few players that could buy them out. Maybe NVIDIA, AMD, Taiwan Semi, who else? Broadcom, probably. Any of the really big chip companies would probably be able to do it, but we'll see. Who knows? Maybe even the Mag 7 companies would be interested. But we'll bring up all of that. A couple more stories to go through. We got Tesla. We're going to bring up a full self-driving update on their vehicles. Some of their cars that are manufactured are now, did my camera go out? Are now made in, can somebody comment on YouTube if you can hear me? My camera just went away on my computer. I'm wondering if you guys still got me loud and clear. Testing, 1, 2, 3. Before I continue with this story, let's see. Anybody in here? I could pull it up on my phone and check. Jonathan, you can see and hear me? Okay, thank you. All right, I'll just continue then. If you guys lose me throughout the stream at all, just let me know. Can hear you, but you are freezing occasionally. Yeah, there's been a problem with the Wi-Fi where I'm at in the past week, so maybe I'll have to switch over to a hotspot to stream and then figure it out. If it becomes an issue, just let me know and I'll hook up to a hotspot instead. Let me get back to the Tesla story though. So these cars are now driving a 1.5-mile loop with just full self-driving, and it's unsupervised, so no human interference. And they originally gave the deadline date to be June, back when they had the We Robot event. So that's really fastly approaching now, just 2 months away. Do we think that date is still going to hold up? What will happen to the stock if it's pushed back, or if they are able to meet the deadline, and that's when they finally get a full self-driving product available. Next, we have Pfizer scrapping their daily weight loss pill after they caused an injury in a patient in their liver. Pfizer actually didn't react negatively to this headline, but Eli Lilly and Novo Nordisk both up. So less competition for those two, giving them more time to maybe develop a pill version of the product themselves. We've covered Eli Lilly a lot, and they were one of the best looking stocks in our signals for a long time. So thought it was a good story to bring back up. We haven't covered that in a bit. And then last but not least, we have we're going to cover the earnings season beginning this week. We have the big banks, and then we have Netflix on Thursday. So what are we expecting out of this? Hey, George, welcome to the stream.
Hello.
Let's see, where was I? I'm going to be going over like where is the bar, as the market has kind of been in a tizzy this year with the volatility. Can these companies kind of exceed a low bar? How is guidance going to be for the companies? Because with so much uncertainty, are they going to be able to give good guidance that Wall Street will be happy about? And then last but not least, there's this theory being floated around that there's going to be a pull forward in a lot of these companies as buyers are trying to get ahead of tariffs. So is that going to come through this earnings season and kind of boost and be more bullish than people are anticipating when the earnings come throughout the next couple of weeks? But we'll start where the market is today, with everything being in the green, George, and also the VIX being down almost 20% now, fighting with that 30 level, which I think some investors are watching today. We got some good tariff headlines over the weekend, but there was a bit of mixed signaling. So how are you feeling? I saw that SPY and QQQ net option sentiment were a bit higher today, so maybe a little bit more bullish than we were at the end of last week.
Yeah, I mean it's doing better. I thought about adjusting my portfolio earlier today, but I think I'm going to. I wanted to wait and see it play out a little bit. Probably going to make some moves at the end. But yeah, with all the volatility, I think that's probably the big thing that is different from this year than a lot of other years. Like if I saw SPY net option sentiment go from like 17 to 40. I forget which one is the higher one. QQQ. Anyway, if I basically saw 20-point moves at least in SPY and QQQ, I would have flipped my whole portfolio. Much more bullish, but now I'm not necessarily doing that. I'm letting it play out. I'm seeing if they go back down, seeing if there's another news event. I was pretty comfortable, pretty even long short. But yeah, I think in this time especially, you don't want to be too quick to act.
So the headlines that we got were exemptions in the tariffs for smartphones, computers, other tech devices. So it seems to be boosting a lot of the tech stocks today. I saw Dell, Apple, amongst many others. Obviously, the market's up because of this news as well. Are you feeling much better about the QQQ, specifically the Mag 7, all of these tech companies that were being hit the hardest by the tariff saga?
I mean, I don't know. I was talking to you about this. I talked to other people. It's like all the news over the weekend, it's not even clear if those tariffs are going into place or they're going to, there's so much confusing information. So it was kind of hard for me. And I don't really, to be fair with my portfolio, I don't really think too much about, I got to capitalize on this like event happening over the weekend. Because I like to kind of build the portfolio as much as I can and not necessarily try to get any, over the weekend advantages or anything like that. One of the reasons I ended up regrettably not adding Alibaba, even though it did look pretty good. Baidu looked pretty good. I probably should have done that, but that was one of the reasons I talked myself out of it. I didn't want to try to capitalize on that. But yeah, I mean, the other reason was it's confusing. right? That's one of the big reasons. It's just like I don't really know what is going into effect, and like as we've seen with the pauses, like even if something does go into effect, how long is it even going to be impacted as policy, or is it just something that seems to be a negotiation tactic? Even though I'm not really clear what we've gotten from those negotiations, it's just a very as someone that tries to model things as accurately as possible and to figure out a real where real tangible impacts are, there's so many kind of false starts, changes. We're going to do this. We're not going to do this. And in this one, we've heard, well, we're not. Those electronics tariff might be lifted, but we're going to do something different on semiconductors. It's just very hard to figure out exactly how to tangibly model and incorporate something like that, which is one of the reasons why we started pretty even long short this week and will and stayed that way this morning, because I'm still not entirely sure what we're dealing with even.
So the way this kind of type of events went last time, you called it like a trial balloon, which I had never heard of before. The way they kind of like put some good news out there, pulled it back, and then it was actually the real news in the end. It seems like that's the way the market is kind of reacting to what we're seeing here now, and how you're saying it's confusing how this story came out. I think from Trump himself about how there's going to be like lessened tariffs on this stuff, but then his aides and staff kind of refuted it after. But it seems like kind of maybe the market is expecting it to be the same playbook that it was for the event we saw just last week. So is that how you think the market's reaction? Is that what you're seeing take place? The market's kind of pricing in that same kind of event?
Yeah, I mean, what we saw with the pause, right, was the news leaked, it was denied, and then a few days after it was denied, it became real news again, right? So I think whenever you see a pattern, you kind of have to say, okay, this pattern might repeat, and that seems to be how the market's treating it, right? Like I said, I don't even know what's really enforced, but the market is treating this event, just to be clear, they're treating it like there's going to be reduced tariffs and pressure from some of these exempt goods. But the real problem is some of this is starting to become very confusing, right? Because, okay, are we trying to win in a war of attrition with China? Because if we are, right, reducing kind of some of the key exports that Americans spend the most money on doesn't seem to jive with that, right? And one of the things that I think was a very good point that I read over the weekend is just like, okay, if you exempt those Chinese goods, right, it's actually way cheaper to manufacture something in China and bring it over for the exempt goods than a company that says, hey, I want to manufacture, say, like laptops in the US now. Like, that's way more expensive because all of the parts that you still can't really buy in the US manufactured goods, at least not enough to have a major, you might be able to find them here and there, and we're increasing them. But, basically, if you want to manufacture, say, a laptop in the US with this, it's still like now actually orders of magnitude cheaper to do that in China, because now you're paying for the raw materials and tariffs only to manufacture it in a more expensive place, America, whereas before you could actually get those reduced cost, inputs to building a laptop. So that's where it especially doesn't make sense, because if we're trying to ultimately spur manufacturing in the US, but we're exempting some very key, high demand products in the US, that doesn't make sense, right? Now, there could be some, semiconductor tariffs that are coming, but I think where you kind of see the most critics coming out, even, Republican supporters, donors, that kind of thing, that said even when they agree with the tariffs, a lot of people are saying that the way they're being rolled out is not the way they understand a prudent way to roll out tariffs in terms of the speed and even things like this, where it's just like, well, okay, so you're pulling back the electronics ones potentially, and there's some semiconductor tariffs that are being promised and substitute. It's just like, well, why didn't you prepare the semiconductor tariffs in line with this pullback, right? It doesn't make sense. It seems disjointed. It seems like, for lack of a better thing, it's just too volatile, right? There's too much change. It's even too hard to keep track of at this point. And like as Ryan said, it's going to be a tough market, and that's why we're not kind of overreacting. I think what we'll probably ultimately do is just pull back some of our positions instead of opening a lot of new ones, just because. And that was one of the things why we took a lot of different positions to spread ourselves out more than we have lately, because we didn't really know how the market would react. Now that we've seen about a half a day or whatever, we'll probably pull back the ones that make less sense.
And is it that insane level of uncertainty that has caused gold to soar to record highs this year and act as a pretty good hedge in the volatile market, up over 20% year to date? And is it different, this kind of bear turn that we're seeing now, and maybe it's mostly because of the uncertainty versus a couple years ago when it was mostly inflation risk? Is that why gold is hedging so well this time around, and there's differences in what's actually causing the bearishness?
Well, because of what's going on in the bond markets, currency markets have been, it's devalued, the U.S. currency, right? And I think where people are going more and more to gold is, yes, you have an inflation risk, and I think people are worried about how inflationary tariffs can be. But I think there's also just a lot of currency risk, right? Because you might say, okay, I want to own, the yen or yuan, maybe even some European currency. But the problem is the volatility, right? If the U.S. Figures some of this out, pulls out the tariffs, repairs some of these relations, their bond markets become less stressed, then all of a sudden those, swap trades in those currencies are going to look markedly different. So I think that's where gold has become a bigger comfort, even though it absolutely looks like there'll be a bubble in it, and it's not doing that well today. We're just okay, whatever's going on, I'm covered with currency volatility, because the more people don't necessarily know what's going to happen in the currency markets, the more something like gold makes sense. And then obviously there is the inflation protection too. So it insulates you a lot against a lot of the risks that we're seeing right now. But one of the things that I worry about with it, and I see a bit of a soft day, but I don't know if we're going to flip back the other way tomorrow. I don't know how sustainable this rally is. So I'm going to keep my eye on it. So I'll probably hold that gold position for one more day, at least. But the problem with gold and being the gold standard or whatever, you never know if it's in a bubble where people can say, actually, I want to hedge my inflation risk, or just currency risk in silver, or even I always think even a rare earth mineral like lithium. I think that might be that could be one that looks a lot better in the future in these types of situations, especially as the demand for it increases, and especially if prices on kind of precious metals continue to inflate. That might look like a better alternative. And you never know when there's just okay, gold has reached its peak. People kind of rush out of it to move into other precious metals, something like lithium. So yeah, that's kind of what our letter was about this weekend, about how for everyday retail traders, we see a lot of people opining on the macroeconomy, talking about, tariffs or whatever. And most people don't really have the economic training to do so. And what I basically see, which I always advise against, is someone reads one article or reads one expert, whatever side that it's on. And they'll say, well, they'll just take that person's opinion. And then they'll argue online. We'll be like, well, you're not smarter than this person, where I read it. And it's just well, there's a lot of smart economists. They have a lot of different opinions, and some of them are right and some of them are wrong. Like what you really want to do and is figure out how to best you can shrink the problem. And that's why we called it in our letter kind of inside out thinking versus outside in. If you're spending a lot of time figuring out how, the gold currency markets might interact with tariffs, there's macroeconomic hedge funds that have huge teams of people doing research to work on that very problem. So you, and even the ability to read a few letters, you're not really going to be able to compete with that. That's why we suggest using things like, what we advocate for, which is we use our metrics like net option sentiment, market level net option sentiment, right? That's kind of shrinking the problem and saying, okay, these people that do have a lot more information, a lot more of a research budget, this is where they're betting in aggregate. And I think the more, that's not the only way to kind of shrink the problem, but I think the more you're just like amalgamating key data points from intelligent individuals versus grabbing onto one or two that you agree with the most, I think that's really the risk of what we call as like kind of outside in thinking, starting with the big problem and trying to rationalize that into a trade instead of looking at a small amount of data, figuring out what a number of data sources are saying about that, make sure they agree, make sure there's confluence, and then doing something about that confluence. It's a much more stable and reliable way of making decisions than trying to be a macro economist when, even I would say I don't have the time to begin to grasp at those. And this is my job. But, what I do is my job tends to be looking more at, individual stocks, researching them, looking at the signals, seeing how the signals change. That's a big enough job for me without spending a ton of my time on the macro economy that I need to compete with the people who are, spending all their time researching gold and figuring out, when the right macroeconomic conditions to buy it and get out of it are.
So I guess you could say that gold has been acting as intended so far this year, the way investors use it, kind of inverse the market or just so it could trade not so correlated. I wouldn't say the same about Bitcoin. It's kind of traded directly with like the growthier tech stocks. Do you agree with the narrative that one day Bitcoin will trade like a digital gold and that maybe Bitcoin and gold will be much more correlated than Bitcoin and like the Mag 7 per se? One day far down the road when Bitcoin can, be more, have a longer history. It's competing with the oldest currency in the world right now. So maybe it needs time,
Yeah. Yeah, I'm not sure about that just because of what you're saying that like, yes, it does trade pretty similarly to like, and markets tend to move, especially now the big indices pretty close to each other because like I've seen it move with the SPY pretty reliably, with the QQQ pretty reliably. So yeah, I think until people look at it, as a risk asset. Right. And I think people look at gold very much not as a risk asset, very much like the inverse of that. Right. And I think it's kind of interesting because if you really break it down, people are speculating on gold. Right. But people are speculating because it also has some, gold is used as a material in building things. And I think that's one of the reasons it still has kind of like a higher floor than Bitcoin. And that's always the risk with Bitcoin. But no, I think we have to see, like, we're not even close to Bitcoin being looked at that because like right now it trades very close to risk assets. It has done a little better than the SPY and the QQQ lately, but that's, I think, because it also got hit harder first. But no, I think as long as we're seeing that behavior, it's very hard to say that it's going to be looked at like gold ever.
So spinning to an NVIDIA news story that they announced, they're going to be making American-made supercomputers in the U.S. for the first time using their Texas and Arizona plants. I wanted to combine this story with a headline I saw about Apple. They're now making 1 in 5 iPhones in India, so shifting away from China. I'm wondering, we highlight a lot of the problems with these tariffs that could be caused for the U.S. economy, but I'm wondering if there's just as many risks for China, and if you think of the tariffs as kind of like a wrecking ball, and they're hitting USA on one side, while there's someone on the other side of that swing too, and maybe China will be hit hard, just as hard, almost as hard as the US. And I think there's a term in, like, when people discuss nukes, of like self-assured destruction or something like that, where there's like a time if it's launched where a country can react and both will be blown up. Is that kind of how these tariffs could be for economies around the world?
Mutually assured destruction.
There you go. There you go.
I saw a pretty concerning headline over the weekend that that the EU is negotiating with China to create, instead of tariffs, minimum prices on EVs. And that's a really concerning development, because you could say that, yes, China's in for a lot of pain if that happens. But, part of what I don't understand about these tariffs is that if you want to gang up on China, if you want to beat China in this, you really need allies. You need other people coming with you. So kind of picking the fights with our allies at the start, that's what I really have a lot of trouble understanding here. And if it swings the other way, where places like the EU are making deals with China that didn't exist before, that some of these products are going to be sold in Europe because there's friendlier deals there than there were before, that to me is very concerning. That's where I'm just like, okay, maybe we won't see it go if China's, because like China's been preparing, for their mineral deals, they're preparing, good relations with a lot of African nations, a lot of South American nations, things that we haven't really done as well. So I do think they'll see some pain. But the other thing about it, and it's not often discussed, and you could say this is a good part about the U.S. When COVID hit China, there were drones keeping people in their houses to comply with the orders. And there were a lot of ways that the U.S. messed it up, but I'd say one of the things was that, like, even when they were going for lockdowns, there were a lot of people that were still not doing that in the same way, and China moved past it quicker because things like those drone deployments actually worked pretty well. That's all to say that my concern with the U.S. is actually just as much with our people having problems with each other under economic stress and fighting as it is the actual economic issues. There's a lot of tensions in this country, and I don't think you have to look very far to see that. So, using that analogy, if there's pain in both countries, China has ways of keeping order and stability that are very thankfully, hopefully, not in our playbook. And I think that's the other thing, that it's like all things equal, right? In terms of economic damage done here, I think they have the ability to handle economic stress socially better than we do. And I think that's that's one of the major concerns in this for me. Not just the economic damage that can be done to this country, but what happens when that occurs.
Mm-hmm. We got a comment from Bob. He said, collective punishment on everyone, but the real target is China. I'm curious, George, do you have any intuitions, like if you were to interview just like regular Chinese civilians on the street, and you asking them, like, how do you feel about these tariffs, what their responses would be?
I think it's going to be very politicized now, right? I think it's basically political opinions because we really haven't seen the impact of it yet. I keep waiting. Like I got groceries yesterday, and I didn't really see grocery prices moving that much yet. So I'm waiting to see that because that's one of the things that we say, but I don't know. I mean, I think it's pretty interesting during the whole like TikTok thing ban. There was I think there was a lot of kind of propaganda moving to American people, and I think America tries to obviously put things out there against China too. And I think probably most. I mean, that's the thing. Anything we know about China says that they're not really allowed to speak out very sharply against the government. So I don't know how we would find out if people were really pissed off about the tariffs, because A, it probably wouldn't leave their internet. And B, I'm not sure in that kind of like developed authoritarian state how willing anyone is to criticize the government anymore, even if they already have like the proper information and anything like that, and we don't know that they do.
So I heard this news blurb from Ray Dalio over the weekend, and he was the first person I've heard. There's been tons of Wall Street voices that have said like they expect a recession. Jamie Dimon and a lot of other respected people. It's pretty obvious at this point that like recession is on the table. But he was the first person that really kind of went past that line and was kind of talking about something like a depressionary event. He cited the '08 crash as saying something could be more severe than that because of what he was seeing in the bond markets, which you've been talking about more recently. Maybe you could really highlight like what you're seeing that's so concerning in the bond markets and why that is like such a big problem for the markets, because I feel like I don't understand that. Probably a lot of people don't. And how about this Ray Dalio going out on his own, saying that a depression could possibly occur?
Well, I mean, the bond markets are like the simplest way to explain it is it's a supply and demand thing, right? It's like if everybody wants to dump your bonds, that's going to send the price down and the yields up. And if you are offering new debt, and that's the biggest concern, right? We have a lot of debt. We have interest payments to pay. We run a budget deficit, right? We try to offer new debt, and the prices are already going down, right? Obviously, the more supply, also that lowers prices, right? If you have a lot of sellers and you have new bonds going into the market, that's going to depress prices even more. And we do need to sell bonds, right? And then if you also have countries that normally buy them, right, also reducing the demand to buy new ones, that, that can create a lot of problems. And it's just like it not only creates problems in terms of our ability to raise capital. Obviously, it also has effects. You can see when yields go up, the kind of effects that has on the stock market as well. And I think what Ray Dalio is saying, I think what I'm looking at that's scary, and he's probably looking at a similar thing, is that this administration seems pretty intent on trying these tariffs, making the change, but it didn't go very well, like pulling it back. Like I hope it starts to get better. I hope people are taking it seriously and there's deals to be made as the claims, happen. But, the counterpoint on that is if countries were going to make these deals, wouldn't they be more likely to make deals with us before we kind of pulled back the tariffs at one day? That actually shows that we're getting enough flack, right? And Trump even admitted he had to be flexible when he basically saw what was going on in the bond market, right? So it's just like we've really lost our ability to kind of show that strong hand that we would really need to make the tariffs work. So I think there's like scary outcomes there, right? There's a scary outcome of us continuing to try to do them and that having more harmful outcomes. But also when you hear things like, China making deals with the EU around cars. I think what we're seeing is, before we kind of had people opposed to the way China ran their country, right? But I think what we might see, right, people prefer stability over, political ideology matches, time and time again, right? It doesn't matter how much you might be aligned ideologically with another country. If it's just unstable, then you don't, and it's going to use your trade deals as a negotiation tactic with the rest of the world or whatever. That's a very hard counterparty to deal with. And I think that's the beginning of what scares me, where it's just okay, if we keep going with the tariffs, put them in, especially with what we've seen already, there's definitely going to be pain. We know that now for sure. But even if we pull them back, we might have done enough damage with our trade partners that they're already looking for more stability. And that could really hurt our economy regardless. I mean, even the tariffs that are staying in line with China. Now, I think the market's reacting like those might go away. But those are definitely going to have an impact on the economy. I mean, it's kind of funny. I've been reading a little bit on Reddit, people that are already affected. One of them is a sex toy company, and obviously that's being specifically targeted. But the other one was just they made wheels, and they used to buy them from, and they were literally asking, it's I bought these from China. Does anyone know where to buy these alloy wheels anywhere else? Because that's my business. And that to me is a sign that there's potentially a lot more pain coming when someone's just literally asking Reddit where to get supplies for their business.
Mm-hmm. Yes. I want to spin now to this Intel story. They are selling a 51% stake in Altera to Silver Lake. And I feel like Intel has been selling off bits and pieces of their business now left and right for the past year. I'm wondering, do you foresee a world maybe by the end of this decade, so 5 years from now, where the once great American company Intel is a thing of the past and they will be fully acquired by one of the giants in the semi space? I feel like there's a ton of players in the semi space. There's 2-3 dozen companies that are tens of billions or hundreds of billions of dollars. So what do you think? Could Intel soon be a thing of the past?
Well, that's honestly where it gets so where it's just so hard to keep track of everything that's going on, because I even when there's less volatility, less policy change, as you were talking to me about this, but I actually feel it's a better way to talk about the story. I was going to do the research. It's I was just is the CHIPS Act still in effect? Is it going to go away? I've kind of seen things obviously the CHIPS Act is very good for Intel, but yeah, there's a lot of these complexities now that it's very, very hard to figure out exactly how to manage around. So that's all to say, I think Intel is one of those businesses that I would only have in my portfolio for a short period of time. We kind of talked about this with GME over the weekend, where it's just that's part of the inside out thinking, where it's just well, if our signals look very good, if the insiders like it, we could take it on a short ride, just because that's not typically what I do. Typically for a stock like GME, I'll be I don't really like their business long term. I don't really like any business whose best idea is to buy Bitcoin that has nothing to do with their business. That's kind of scary. But, we could take it for these short rides because we're looking, like we were talking about with international relations, we're looking for stability in places we might not otherwise. So I think that's really how I look at Intel, where I'm just I don't even know what their long-term business is at this point, if it's any good, if these, if it's going to be affected by this. But yeah, when you look at something and where, kind of bringing it back is when you look at a business where the best thing going for them is maybe the government is going to subsidize parts of their business and maybe they're disposing of others. Like, that's at best a risky proposition, at worst a dumb one.
So let me jump in here. So you brought up GME. I'm shocked by how well GME looks in our signals, like on a kind of regular basis. But you have to admit, buying Bitcoin, I guess, with the signals we're seeing, is better for them than buying a gold mine was for AMC, I guess, right?
I mean, it's kind of similar, actually. It's like it's. I mean, actually, I prefer the gold mine because at least the gold mine, you're controlling operations, right? You have no control over Bitcoin, but at least you could, like, if you've got some angle on figuring out how to operate a gold mine better, at least like you're using the operators of the company in some way that you're already paying. But they're both pretty dumb.
Hey, with gold prices, maybe they made a pretty penny on that investment. I don't know. We'll have to look up if AMC is making gold mining profits in their next quarter. We'll see. Okay, so I have a story about Tesla. I want to bring up their full self-driving because I feel like we haven't talked about that specifically in a while. And when they did that We Robot event a while back, they set the date in June, I believe, which is now just 2 months away. So it's really coming up. There was a headline about how they are now doing FSD unsupervised drives from their cars that straight from the end of the factory line to the outbound lot, which is about 1.5 miles. They're driving through, traffic, pedestrians, all that with no humans. Do you still expect Tesla to meet this date they gave in June? And then we'll go for the repercussions of if they do or if they don't from there.
I mean, they've kind of missed a lot of these dates already. Like, I'm of two minds of it. I'm of the first mind of being like, they might be really pushing this one because of what's happening with their sales, right? Like, these news events are going to be accentuated down. But, when you do miss dates, it ultimately means that you're comfortable that, the shareholders will be patient. And you just want to release a better product. So I don't know. Like, gun to my head, I would say because of everything that's going on, they're going to hit that date. But to the consequences, like, I think the flip side is, maybe the people that are still in Tesla are just the really loyal ride or die people. So they might be a little less worried about, hitting that date for that reason. But, I'd say they do, it's a pretty heavily shorted stock now. And I think just to not attract the attention of more short sellers, they might just try to get something going. And the other thing is, like, we have seen them get pretty close to FSD in a lot of ways. So it does seem like they're ready, or at least ready to give it a try. I know they're pretty excited about their Austin pilot going head to head with Waymo. That'll be pretty interesting. But yeah, I would say more. I would guess more likely than not. But we got to see.
Well, there was that headline of Musk kind of stepping away from Doge, and I feel like we've heard a lot less from him recently. Do you think it could be starting forward from here? It could be more about the business of Tesla versus all the other stuff that was, affecting the stock in the first part of this year?
I don't know, and I don't know how much he's actually stepped away from Doge versus like his role just being downplayed, because I continue to see Doge doing things, right? It's not as if they've disbanded it, or like, to me, like, you got to look at these approval ratings, right? And I think his approval rating was very low on the work he was doing. So to me, that could just be a PR story. Like, I don't know anything about him actually, like, stepping away versus perhaps just being there, his work being mentioned less.
All right, so last angle of this story. So if Tesla does go forward with their launch in June, I would imagine that's going to have ripple effects of the self-driving narrative. I kind of asked about this before, but Do you think like from that point forward, from the back half of 2025, that could kind of be the exciting trend that investors are excited to invest in? And then the players would really like, I don't think there's very many. It's just like kind of Tesla, Google. I think Mobileye is a smaller stock that has some self-driving stuff. I guess some very smaller players after that. But I guess Tesla and Google would kind of be the main winners if that were to be the case, right?
Yeah, and the scale, like Waymos are very expensive to build. And I like to my knowledge, I don't think there's any plan to have people own Waymos. Because they're so expensive to build and they just beat cabs. But like that's the thing that Tesla really has better than anything in this country, the people that still own Teslas. That's just like flip a switch to I mean, it's not a switch. You pay for it, and then Tesla flips the switch. But yeah, like the second that is allowed, like, and by the way, I mean, I hear about a lot of people using it, even though it's not really allowed yet. So I think that probably prohibits them from collecting the revenue on it. That would be my guess as to why you're not really seeing tons of revenue from it. But yeah, once it's allowed, there are a lot of Teslas on the road, and that will make that's like a big MRR to get that full self-driving. So yeah, that could create some excitement again. But we also have to see how the sales are moving in other countries.
I was going to
because that could offset it.
I just had a thought. Like, I don't think anybody's debating or even questioning that full self-driving will be a thing one day. So even if it takes longer, and obviously we're seeing all this development of robots, the Optimus robot. Like, what happens to businesses? And I forgot to mention Amazon. We shouldn't forget them with their Zoox. But what happens like to businesses like FedEx or UPS if one day like all of their deliveries are all automated with robots and a self-driving vehicle? Like, do those businesses become much higher margin? And would they be like way more attractive to invest in? And even Amazon, Walmart, all these companies that have a lot of delivery and movement, transportation.
I think that's like it could be, but what I don't think UPS can compete with Amazon on robots. I think the day that happens, the day those companies are screwed, right? And we're just all going to start like, you'll probably get your like Amazon. I'm sure there'll be like Amazon Prime Plus or something like that, where you can just like ship whatever you want to, and they'll just come. The little drones will come grab it. I think it'd be really fun if they. Oh no, I can't even do it out these windows. I'd have to go down to the lobby here. I was like, it would be really fun if maybe I could meet it on the roof, just even easier than the lobby. But yeah, like those places better. And I like, to my knowledge, like UPS, FedEx, they're not really investing in their robots. But maybe what Amazon would do is they might sell or lease robots to those places in case, so they didn't have to have like all the infrastructure. But no, I mean that's another business that Amazon's going to eat.
Yeah. So maybe they'll be a thing of the past like Intel soon. But so spinning to Pfizer. There was a story today about how they're scrapping their daily weight loss pill because it caused an injury in the liver of a patient. It was interesting. Pfizer stock wasn't really reacting negatively, but I think Eli Lilly and Novo Nordisk got a bit of a bump on the news, maybe less competition for that space and kind of giving them time to develop their own pill version of I think it's only a vaccine still as of now. But we haven't talked about Eli Lilly in a while. It was one of the better looking stocks for a lot of last year in our signals. Do you think this is good for them and the other player, Novo Nordisk, in that weight loss space?
Yeah, I mean, RFK is kind of like the specter hanging over any biotech stocks, especially. So I think that's why we've stayed away. And a lot of like, it's kind of a self-fulfilling prophecy, right? Like we've seen institutions, pulling back on their bullishness on that, which is going to make us pull back. So yeah, I think that that's definitely it's hard because I do think Eli Lilly is a good stock, but just with all the unknowns about this administration and how they're going to handle the healthcare industry, because it's not just kind of some of the higher tech vaccines and things like that. It's also just like what we're talking about in terms of negotiating drug prices and things. It's very hard. I'd say, especially with this administration, to look at things, right? Because you have your headlines, and there's a lot of headlines about what they might do. And I think some of those, like we're talking about, are trial blows, right? So first you have to sort through the headlines, right? And then often when these things happen, they're sudden and a lot of the times through executive orders. So that's the other problem, right? It's not like you could be like, oh, there's a bill up for, in the Senate or the House, and this is how it's going to, like, it's a lot easier when you have the lead time to do that. But I think what we see a lot of the times here are, right, you get all of these headlines of things I think the administration is like considering. And then a lot of the times you don't hear about it again until there's an executive order. And that's what makes this market so tough, because, there's so many, you can't take everything you hear seriously. Like, Trey, I think that's what, like, one of the reasons we say, don't do outside-in thinking. Because if you were trying to, like, take all of these policy things and turn them into, actions, it would just be too much information, right? But then it's really hard because, when you get these executive orders, it's always something where you're just like, okay, yeah, I remember something about that. It's not sudden. I mean, it's not unheard of, but it is still sudden. You get the sudden impact of the headline, and then you get the sudden impact of, not every time, but a lot of the time, executive orders. And, for everyday people, by the time those headlines have hit, it's too late to get in on the stock appreciation. So that's what makes it really hard. And that's why, we've really focused on, moving away from things that we have, like, in the past, in like anything we consider too headline dependent, we kind of move, and our signals, I guess, move away from, because there's more apprehension. I think a really good example about that is we've been in Google a lot more recently than Meta, which is traditionally like one of the stocks we really like. And Meta has been sensitive to some of these headlines, less bullishness around it. But, Google's just a better, and there's risk on Google, just as there is on Meta and some of these international relations things. I think people are especially worried about what could happen in retaliatory things with the EU and our tech companies, where there's, obviously big markets there. But, to the point I'm making, Google is a better value right now than Meta. So you de-risk some of that, and that's what we're seeing in institutions. It's a similar, there's similar risks to those businesses, but you're de-risking it a little more by getting Google because it's trading at a better, value multiple.
So we have one more story or topic to get into here, but first, thank you to all over actually 2,000 of you who tuned in today. Like the video if you liked our topic so far. I want to talk about earnings, which is set to begin very shortly. We have big banks coming this week. We have Netflix on Thursday. A lot of what we're talking about recently is risks on the market. Maybe if those risks are beginning to be priced in and some of these earnings aren't as bad and the bar has been lowered, we can see some good reactions. But you typically, I feel like, don't like to play earnings to begin with. So maybe it's even more not outside of your scope right now. But how are you feeling heading into it?
I mean, I think especially with like the forward, like with concern about the tariffs, maybe pushing earnings forward. I think that's a double-edged sword, right? Because while that headline number could make the stock, beating earnings, beating revenues, could make the stock go up. If they ultimately have to say we're reducing guidance because we think some of these sales pulled forward, that's really bad, right? Especially if that's an unknown amount and they can't forecast it well, because I imagine it's kind of hard. I don't think their customers are necessarily being like, well, we only bought this because we're worried about tariffs. So yeah, I'm even less inclined to play earnings unless like a stock like NAK. That's like one of the small caps we've been adding that's been doing pretty well, even with tariffs. Like, I think potentially if there's like structural like improvements to a business, that's the kind of thing I would want to make earnings for. I would want to play earnings for, because it's just like, okay, actually they could be reporting stronger earnings as a result of these tariffs. That's the kind of thing, like structural things, I really want to look for. But again, it's very hard to know what's baked into that already. So you could be saying, oh, I got a structural improvement, and it could be at earnings and everyone could have been expecting more of a lift in revenue. They could have been especially expecting a beat. So yeah, I'll probably be pretty sensitive to that, especially on large cap growth stocks, because I think a lot of the large cap growth stocks could want to forecast conservatively with all these unknowns, right? Because there's nothing worse for your stock price than, you want to take a little medicine today as opposed to a lot tomorrow. So I think we might get conservative forecasts just because we don't have answers on a lot of this stuff. Like, we don't have answers on, the extent that, the pause will be, reinstated and how long that will be. We don't have answers if there's going to be more of these kind of EU, like if the EU, as that date gets closer again, starts to make more, they've had more time to think about it. They make more real threats. There's tangible proposals on the table for what's going to happen to big tech in the EU if we do put those in force again. And I think that is a risk of all these pauses, right? That you do give people more time to.
Am I back?
Did I lose you, Steven? I'm back.
I lost you at the end there.
Oh no. Where did I lose? Where did you lose me?
About 15 seconds ago. Not too long. You just started stuttering for me.
Damn. I liked what I said at the end there, but I don't fully remember. Oh, yeah. I was saying that that's kind of a risk of these pauses, right? Where like you do give people more time to prepare the countermeasures, right? Now they kind of know the plan, right? So if you're thinking about risks to big tech and the EU, that's a big one, right? Like, by the time, if the tariffs are unpaused again, leading up to that, we might start to have the EU saying, actually, we've prepared specific policy that's going to hurt big tech if you choose to reinstate these tariffs. So we don't know what's going on behind the scenes, but generally, the more time you give people to prepare, if you're going to take aggressive action against them, the more time you give them to prepare countermeasures, the better, the more prepared they're going to be. And that's just, when we're talking about potential deals with China, when we're talking about they've threatened tech, maybe they create US tech, maybe they create more tangible policies to do that in this time that we've given them between the pauses and the starts. Those are all, very real risks, and I'm sure there are risks that big tech is thinking about. And we talk about that in the way we talk all the time about institutions modeling stuff. And, companies have to model their own businesses as well. So they're making these forecasts. And, they might say, well, how much do we, maybe we think the EU could, enact retaliatory measures that decrease our revenue 20%, right? But we think that's a 50-50 shot. So we're going to reduce our estimates by, 10% in Europe. And you're going to see that bottom line there. So that's the kind of thing you have to, like, in these tough situations as a company, as a responsible company, you have to really think about how to accurately model these things.
And with all that being said, we're seeing the markets pull back close to even. The Russell is the only one in the red now, so it's going to be an interesting update from you, George. We'll see which way it goes today.
Yeah, VIX it started down 20%. It's all the way up to down 11.79% just in how we've been talking, right? So it's nice if you start a live stream saying maybe you should have made more moves this morning, but with all the volatility we're not, and over the course of the live stream, that looks like the right thing.
Yeah. Just an hour, you were proven right. So we'll see you on the other side and see the updates that we make to the model portfolio. So everybody who's tuned in, stick around. George will be right back with us. He's going to switch over to the Prospero.ai laboratory so he can do the model portfolio update. Thank you all for watching today. Let's get a live look at the QQQ and net options sentiment in the Prospero app, see if they are dipping with the market. All right, we'll look at the SPY first. Okay, so the SPY is currently at 11 now, and I think when I peeked at it this morning, it was over 30. Yes, in the time series graph at 9:40 a.m. today, it was at 31. So back down to 11. So a little bit of softening in SPY net option sentiment, and let's look at QQQ as well. QQQ is at 20. And this morning at 9:40 a.m. it was at 2. So shifting in the net option sentiments reading for both. Today's an interesting day. We talked about at the beginning of the stream how a lot of investors were looking at the 30 level for the VIX to see if we get back in the 20s. Looks like for now, 30 is going to be the low, and it's bouncing off of that level. So still a lot of time left in the day, though, for stuff to play out. Going to be interesting to see George make his moves. Let's look at the market, see how some of the big movers are doing today. We have Apple still in the green, up 2.5%, although it opened at up almost 7%, so selling off. Amazon red, Meta red, Microsoft red, Tesla red. Google is also in the green, so some relative strength there. Let's look at NVIDIA as well. All these tech names are doing much better this morning. NVIDIA is now red on the day after being up almost 4% in the pre-market, now down almost 1%. So big sell-off. I wouldn't say a big sell-off. A lot of softening across the market so far as it's opened up. So retesting that big gap that we had on this Monday, but we'll see where we go from here.
Yeah. All right, let's see where we're at. I saw SPY was down to 28. Is it any lower?
Oh, yeah. SPY was at 11 when we just looked.
Damn. See, my instincts were right.
Fade every bounce. That's the way it seems currently.
It's funny. That's always like, especially on Monday morning, I'm always asking myself the question, like, am I managing risk or am I being lazy? It's like, yeah, it's probably market's probably gonna go in the other direction. All right, with it moving so fast, we should probably oh, I keep forgetting I got it. I keep on forgetting to update the screener. I'm such a delinquent screener maker. Okay, let's see what we got going here. Oh, that's interesting. Oh, you can see my screen, yeah.
SPY and QQQ dark pool are now at like 88 and 89. Does that mean anything, or are they usually at that high of a level?
That's high, yeah. You know what that might mean? That there's another announcement coming. We should start watching those levels, for sure. Although small cap.
like a good day for value, but small caps continue to lag. We have been increasing our exposure to small cap bears and will continue looking for opportunities there. Utilities, real estate, and consumer defensive are looking good, which is interesting. It points to this being a rally on more conservative stocks. We will look to increase our bull exposure in those sectors and bear in consumer discretionary and energy. SPY net option sentiment update is now at 20. QQQ is at 22.
Oh, damn. Meeting each other down now. That's odd. Okay. What was I doing this? Interesting. Are the CSWIs a win? Either of them?
I see one loss. Let me see. Yes, one is a win.
All right. We'll dump the win. Oh, that's wrong. That's 637. 34. Okay. AL. Okay. What's going on with the wall? Oh yeah, I already have 2 of those. Okay. All right, I added all those, but since I did that, I'm also going to look for, I want a small cap technology. Okay, what are QQQ and SPY at?
Wait a second. Did I see SoundHound make the full ad right there? Spy is
Yeah.
at 14. An old friend is back. And QQQ is at 18.
Damn. Okay, we do have to. What is UNP? The railroads? I just always, anytime I see a railroad stock, I always have to think of Michael Scott in The Office saying like he like names there's 4 types of businesses and one of them is railroads. Oh, Ferrari, interesting. Doing surprisingly well. Okay, there we go. All right. Oh, damn. All right, we'll keep an eye on that. We're considering dropping Under Armour, but no, we're just going to keep our eye on that. But I do kind of want to get back into Wolf on the short side. All right, I think that's all for now. Anyone have any questions?
No questions in our chat. Something we didn't mention, just we should mention it, is a shortened week. I think the market's closed Friday, so I don't know if that's going to affect anything throughout the week. But worth a mention. Oh, we did get a question, I think, at the last second from Ryan. Do you think retail sales on Wednesday will be a market mover because of all the fear and uncertainty?
Do we think retail? Yeah, I think one way or the other. I mean, obviously, if it comes in as expected, I think we're seeing that kind of be a small net positive these days. Whereas I think even a few weeks ago, we were not seeing that behavior. But it's one of those questions where it becomes very hard to play because you don't know how well the forecasts are already incorporating this. And I don't really think, we haven't really seen tariffs hit yet. So it's a hard question, but I would probably, if I had to bet one way or the other, I would bet probably a negative reaction more than a positive one. But we'll see. That could, a lot of the negative sentiment could already be baked into the prediction.
And if it is a mover, we'll be live Wednesday at 3 p.m. So I'm sure we'll be talking about it. But until then, have a great day, everybody. See you, George. See you then.